I want to largely stay away from the day-to-day, focusing on how the trading of energy stocks is going, but we'll touch on it quickly, and then we'll pivot back into the fundamentals. Yesterday, we talked about how for the last week plus, we've seen energy stocks be up in the first 30 minutes of trade and then spill down and stay down. And this is day number 7. It happened yet again where energy stocks were up and up big. Exxon Mobil up over 1%. The OIH ETF up, I believe, over 1%. Up a very solid gain to 188 and change. And then closing down at 180. That is a very big intraday move. It's unfortunate. We don't like to see these things, but the trend of up and then down is continuing, and that is abnormal. I'm not a big technicals guy, not a big volatility trader, but it doesn't take a rocket scientist to see that the value of something shouldn't be up and then down in the same day, 7 days in a row. Like, that's ridiculous. The fundamentals continue to pile on and be in our favor. We've seen the White House try to take action and shift blame for rising prices. However, the rise in prices is very easily attributable to things that are happening in both fiscal and monetary policy. The first, let's stick with monetary policy. This has been going on for the longest. There's been a significant increase to the money supply. So when you increase the supply of something, the price goes down. And in money terms, the price of the dollar is the purchasing power of the dollar. Now, this isn't an immediate effect. Inflation is not an immediate effect. The increase in the money supply will occur, and then over time, the effects will begin to happen. So these effects are probably just beginning to happen in the last several months, yet the causes, the money printing, has continued to go on and has actually increased recently and for several months and is likely to continue increasing. So what we're seeing now is the effects that took place earlier in the pandemic, and we still have the middle of the pandemic and the end of the pandemic and whatever's going to come in the future left to go. So the forces we're seeing now are likely to continue and pile on. Now, slight digression here. Another one of the sectors we've talked a lot about on this channel, particularly earlier in the year and last year, were farms. This was one of our first inflationary plays. I've studied a lot of inflationary history, and farms actually do the best, particularly in hyperinflation. Farm goods, meat products, etc., plants, corn in particular, they're highly inelastic goods. No matter how expensive or how crazy inflation gets, people will still need to eat, and they'll pay whatever it takes in a situation of starvation to eat. Farms will just continue doing what they're doing and adjust prices for inflation. Energy happens to have a similar characteristic to this, and the White House has taken actions on energy to curb the increase in energy prices. And today they took similar actions to curb the increase in rising food costs. However, they're slandering the meat producers, particularly Tyson Foods, for the rise in costs. However, it clearly has nothing to do with them. Clearly has to do with the labor shortage, another one of the possible fiscal policy mistakes that has been the cause of the gluttony of government, that they can just write these checks to the people, get them happy and get votes and whatever it is. And the ability to just print money. Two common mistakes that have been made throughout history by governments that have led to the same problems that we are beginning to see now, that hopefully won't get crazy, but are certainly becoming problems now, and there's no avoiding that. However, the White House has decided to address the meat problem by essentially subsidizing meat, giving money to these meat producers in hopes that they can keep prices lower. However, the head of the Meat Institute is fighting back, saying they're blaming us, But the real cause is the supply-demand dynamic of both products. You give people money, demand goes up. They are, not skimping on food. There's some level of inelasticity. It's not perfectly inelastic food. And the same thing with labor. We all know about the labor shortage that is going on. The economy remains strong on the topic of labor. The July labor jobs opening, and this is quite looking back, hopefully it's continued, but it's up 10.1 million expectations to 10.9 million job openings. It's a whole lot of job openings. There shouldn't be this kind of labor shortage, but we're paying a lot of people money. Inflationary effect. Energy has received similar government benefits. The government, instead of giving energy companies money to lower their prices, gave energy companies barrels to sell. ExxonMobil received a lot of these barrels. Looks like ExxonMobil is gaining some favor with the president. They should be. But the president does want to keep the global warming crisis going, even though Exxon has the technology to end that instantly. Basically, instantly. They can put the work in instantly tomorrow to take all the carbon that we've made out of the atmosphere and get climate control over climate change, which has been naturally occurring since the beginning of time. Before the Earth, there was climate change on every planet in the world, in the universe. Anyways, the price per barrel is up. Why is energy down today? Especially when the price per barrel is up and the fundamentals remain absurdly attractive. Well, one thing we got today was the highest number of COVID cases in the Delta wave yesterday. However, this data point is incredibly misleading, yet it is the only thing I can attribute to the sell-off in energy stocks today. Why is this data point misleading? Well, look at Monday, Labor Day's data point. It was incredibly low. So if you combine these 2 days and average them out, it's actually indicating that Delta is not just falling in its rate of change, but is possibly also falling in slope, in total cases, beginning to really prepare for that stride down. We've seen it happen in India. We've seen it happen in the UK and the rest of Europe. We were scared with the UK. Oh, maybe they're having a second wave start. That's turning down too. It seems like everyone who is looking at the data is in agreement that the data is rolling over. And the icing on the cake. Yesterday, Joe Biden announced he was going to begin a plan to curb Delta. He's announcing it tomorrow. If anything is an indication that Delta is rolling over, it is that. We know politicians like to find ways to take credit for things, and Joe Biden needs it. His polls and approval ratings are going down. But so is Delta. And what better time to unveil a plan to stop Delta than when cases are rolling over? Cases are rolling over. Joe Biden is coming out with a plan. Perfect time. So he can take credit when it rolls over. So I believe that as cases roll over, energy stocks will begin to perform very well. Today, we had the CEO of Schlumberger, the largest component of OIH, say he expects cash flow and margins to increase significantly. That is good. That is very good. The stock is selling off today. Clearly not fundamental. Clearly not logical. We buy the dip. I bought the dip quite significantly today. Hopefully this was the bottom. Hopefully we're making some sort of inverse head and shoulders pattern. Again, I'm not a technicalist guy, but I know my trading patterns, had to study them. Hopefully this is an inverse head and shoulders. If it's not, I can't see it getting worse than a triple bottom. I just can't. That said, I have been shocked, but a triple bottom is likely. And as they say, I believe the phrase goes, the longer the space, if you look at it, we're in this very rectangle trading range. Yes, it has been very painful and joyous for very short periods of time. But we've been in this range. The longer the space, the longer the base, the higher the space. We will see what happens. And until next time, peace out.